Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Before we get started, just wanted to remind everybody to support us if you have a chance or if you can. Even $1 helps, and we have a link in the description to a website called Buy Me a Coffee. It's just a way to donate to us and support us. Again, any amount is helpful so that we can keep putting out content. And there's also other ways for you to support us in the show notes to this podcast or on YouTube in the description. In today's podcast, I wanted to discuss a pretty big deal that happened recently. And it's a huge project that the Big Four accounting firms have won. And the news is that HP, which is a large technology company, they used to make computers, but they do a lot more than that now. They outsourced their global tax department to KPMG. And if you might remember, PwC and EY have already done huge deals like this in the past. AIG outsourced their tax department to Ernst & Young, and GE outsourced their tax department to PwC. And there's also other similar deals that have taken place over the years. As part of this new deal, some of the employees from HP will go to work at KPMG. And this is also similar to AIG and GE deals, where employees from both of those deals went over to the respective accounting firm. And KPMG will be helping HP with the following global tax services: international and U.S. direct taxes, international and U.S. indirect taxes, assistance with global tax reporting, and this means filling out forms, transfer pricing support, and basically any other tax assistance that HP requests from KPMG. Now, Greg Engel is the global tax leader at KPMG, who we've spoken about in previous podcasts, and he had the following to say. HP is the latest in a host of industry-leading companies that KPMG is working with to reimagine their tax departments and harness the power of technology to help reduce costs, improve quality, manage risk, and make better strategic decisions. Brian Lin, who's the global head of tax at Hewlett-Packard, had the following to say. HP has enjoyed a long and successful relationship with KPMG. KPMG's deep understanding of today's global tax landscape, combined with the firm's digital capabilities and innovative solutions, will enable us to continue to meet the needs of the regulatory requirements we adhere to in markets around the world. And HP's chief accounting officer had the following to say. KPMG has designed a strong managed services solution for tax and finance that allows us to leverage both a global tax compliance platform and their investment in technology to position us for the future. And lastly, Sean Bloodwell, who's a global tax management services leader for KPMG, said the following. HP is a company that embraces innovation, and we at KPMG share in the commitment to push forward with technological advancement. The suite of tax compliance service options we offer, whether co-sourcing, outsourcing, or another approach, reflects our commitment to meeting and anticipating our clients' current and future needs. And this news also said that KPMG will leverage its KPMG Ignition network to help HP meet its compliance needs. And KPMG Ignition is really just their technology initiative. So this is a huge win for KPMG. This is a huge win during COVID-19. And all the people that made these statements, the reason I went over the quotes was because these are the people that are going to be held accountable. And that's why they're all making statements. It seems weird that these four people are all making quotes and they're all pretty much similar. But these people are the people responsible for this being successful. So they're kind of leading the path forward by saying it's going to be successful no matter what. And these are the people that are going to be held accountable if it's not successful. Now, this is one of the first big wins for KPMG in this area because KPMG, despite what these quotes say, is not a leader in this area. They're not a leader in the tax line of service either. They have the least amount of revenue out of all the big four accounting firms, I believe. As far as tax goes, to say that they're the leader in this area is not true. What's more realistic is that KPMG is more affordable than the other accounting firms. And another thing to remember is that EY can't even offer this up to HP because they're conflicted out because they're the auditors. With that being said, HP and KPMG are both invested in making this new path forward work, because if not, then there's a lot of executives and partners that could lose their jobs. And it's very interesting that it's happening now. We've spoken about previously in previous podcasts about consulting and consulting not doing well. We looked at a profile of somebody that quit Deloitte and it had all the projects on there that they worked on. And when we looked at that, I said that one of the ones that probably won't go away is outsourcing, because if the economy's not doing bad, then outsourcing consulting is still very good because companies want to cut costs, especially if you have too many employees. Because what HP and a lot of industry companies do is they stack up employees over time. The economy's doing well and they don't really care because they have so much extra money, and they get bigger budgets in tax departments, and then they hire more people. But once the economy's going down, those people have been promoted, they have all kinds of benefits, and they're not doing that much work, or they're doing less work, or less work is needed out of them. And as the head of a tax department, you can do a lot of things. You can fire people, or you can outsource people, or you can do co-sourcing like what's happening here. But firing people, nobody wants to do that because it doesn't look good. You might lose morale in the tax department. And don't get me wrong, they're going to lose morale with this because people are going to be concerned about their jobs. Because in these type of deals, when they move people over to the Big Four accounting firms, the Big Four and eventually end up firing a lot of these people. Or it might take a year or two because they have to go through the performance process. They say they're poor performers, and then they fire them. So that's also what HP and the other big industry clients do is they outsource the firing of their employees to the Big Four accounting firms. And I'm sure you won't see this just in the tax department. You'll see this happen across the board in finance and other back office type operations. So that's something else that's happening. But it's a cost-cutting measure because you'll no longer have to pay a bunch of your employees. You keep the essential employees, the ones that you know are doing the work, and then you send the rest to KPMG to figure out what they have to do. And it's a win-win situation because HP gets rid of a bunch of employees to KPMG, and the partner at KPMG who's responsible for this, or the multiple partners, get to take credit for a lot of the revenue that comes in from this. But they both think they're going to end up winning. KPMG thinks they're going to have this consistent revenue that's huge. It's in the millions of dollars, maybe the tens of millions of dollars, and they think it's going to go up every year. HP thinks they're going to win because they don't have to have all these employees on their payroll. It looks better, and they think that they can fight KPMG on the bill in future years, that they can reduce the engagement over a timeline. Don't get me wrong, there's probably a certain amount of fees over 5 years that they have to pay KPMG, but we all know that those contracts can be negotiated or litigated, and they can get out of them. So both sides think they're going to win on this, but it really depends on who does a better job of negotiating in the future and getting the upper hand. But in the short term, both sides win. You get to make press releases like this. You get to say everything's hunky-dory for a number of years. And the bad stuff only comes out when they end up filing the returns and whether they're actually successful in front of the IRS and other foreign governments, whether they're able to reduce the tax bill, whether they're able to reduce the cost to the tax department. If the expenses coming out of the tax department don't get any better and the tax bill for HP doesn't get better, then it's a loss for KPMG and HP, and a lot of people will be held accountable. That's the update for today. Make sure to subscribe to this podcast, subscribe to our YouTube channel, and support us if you are able to. Thanks for listening.